We will be learning about operating leverage. Okay, so before understanding what is the operating leverage, let us understand what does the term leverage means. Okay, the term leverage in general refers to the relationship between two interrelated variables. Okay, so in financial analysis it represents the influence of one financial variable over some other related financial variables. Okay, so these financial variables may be your cost, output, sales revenue, earning before interest and tax, that is EBIT, earning per share, okay, contribution, etc. Okay, now what is the operating leverage? Operating leverage is a firm's ability to use the fixed operating cost to magnify the effects of changes in the sale on its earning before interest and taxes. Okay, so fixed operating cost. So now let us understand how do we prepare a statement of profit and loss. Okay, so we have sales, then you have variable cost. Okay, now variable cost are those costs which will be incurred per unit. Okay, so what can be the example of variable cost? It can be raw material, then some part of your labor. So basically variable cost will increase if the number of unit increases, and it will decrease if the number of units decreases. Okay, so sales minus variable cost gives you contribution. Okay, contribution, then less your fixed cost. Okay, so what are the fixed costs? Fixed costs are those costs which are incurred irrespective of number of units produced. Okay, some of the examples of fixed cost may be your depreciation on machinery. Okay, machinery will be depreciated irrespective of you produce the units or you don't produce the units. Okay, then there will be some maintenance of machinery, right? Then there will be some salary of accounts, finance, HR. Okay, now salaries of accounts, finance and HR doesn't depend on number of units produced. Even if in some particular year the number of units produced are less, you have to give that fixed salary to your accounts, finance and HR. But at the same time your wages to the labor will be a variable cost. Okay, say suppose there is a more production, then accordingly you have to employ more labor and your variable cost will increase, right? That is your wages to the labor. So depending on the nature of cost, we have to specify whether it's a variable cost or a fixed cost. So once you get this fixed cost, include this, you get EBIT or operating profit. Now what is EBIT? Is earning before interest and taxes. Okay, then you have to reduce your interest expense. Okay, that is interest expense on your long term borrowings, interest on debentures, all those interest expense needs to be reduced. Then you get EBT, that is earning before taxation. Then you have to reduce your tax expense or provision for tax. Okay, then whatever you get is earning after tax, which is available to your shareholders. Okay, so this is how you prepare a profitability statement. Now if you see the statement, it is different from your statement which you prepare for the purpose of accounting. Okay, in accounting you have direct cost, you have raw material, labor, okay, and then you have factory overheads, then you have selling and administration expenses, then you have office and administration expenses also. That is a different way of preparing a profit and loss account. Now this is a income statement from the costing point of view which we have prepared. Now what is the operating leverages? Operating leverage is firm's ability to use this fixed operating cost, okay, to magnify the effect of changes in the sales, okay, on its earning before interest and taxes. That is, the fixed cost. We have got here fixed cost. Okay, now this fixed cost, as I told you, it won't change if the production is increased or decreased. Okay, so what does the operating leverage measure is how much does the firm efficiently use this fixed cost, okay, to impact a change on its EBIT, that is earning before interest and taxes, due to increase or decrease in your sales. Okay, say your sale increases by 40%, then what is the impact on your EBIT or operating income? Okay, so basically if there are no fixed costs, then there won't be anything known as operating leverage. Okay, operating leverage is present because there are some fixed operating cost in the business or your manufacturing industry. Okay, now we will see what is the formula for operating leverage. Now formula for calculating your operating leverage. Okay, so what is the operating leverage? Is equal to, okay, increase in EBIT, that is earning before interest and tax, upon EBIT, that is the original EBIT, divided by increase in sales divided by your sales. Okay, this is how you calculate your operating leverage. Okay, so what is basically what you are calculating is what is the increase in EBIT, okay, percentage increase in EBIT because of your percentage increase in your sales. So if your sales increase by so many percent, how much will your EBIT increase? That is what has been calculated by calculating your operating leverage. Okay, now there is something known as operating leverage degree. Okay, operating leverage degree is the change. Okay, operating leverage degree is the change, okay, at any level of sales. Okay, so degree of operating leverage is the ratio of contribution upon EBIT. Okay, but what will happen is it will be different at a different level of your sales. Okay, so degree of operating leverage is equal to contribution upon EBIT. Okay, and this contribution upon EBIT will be different at the different level of your sales. Okay, so operating level leverage degree is at a specific level of sales. Okay, so it will be different at different level. Whereas normal operating leverage will calculate your general leverage, okay, of your impact on EBIT because of the sales, so that it will tell you how efficiently you are using your fixed cost in the business. Okay, fixed operating cost in the business. Now let's see one example and calculate operating leverage. Now this is a example. Okay, so XYZ Limited sells 1000 units at 20 per unit. The variable cost of production is rupees 14 per unit. The firm has a fixed cost of rupees 1000. Assume that the sales of XYZ increases by 40%. The present and the expected cost and profit is shown as follows. Okay, so XYZ Limited is producing and selling 1000 units at 20 per unit. Okay, so variable cost of production is 14 per unit. So as explained earlier, the variable cost will increase or decrease depending upon the increase or decrease in the production. Okay, then the firm has a fixed cost of rupees 1000. So now fixed cost will be same irrespective of your production increase in production. Okay, so now what has been given is a statement showing the profits at a present level of sale and the expected level of sale. So first, sales 20,000, 1000 units at rupees 20 each. Then the sale is increased by 40%. So that is 1400 units at rupees 20 each. So that is 28,000. Less variable cost, again 1000 units at rupees 14 each, that is 14,000. Then expected is 1400 units at the rate of rupees 14 each, so that is 19,600. Then contribution is 6,000, and in the case of expected it is 8,400. Then you have less fixed cost, 1,000 in both the cases. Then earning before interest and tax, EBIT, and operating profit is 5,000 and 7,400. Now we'll calculate what is the operating leverage and the degree of an operating leverage. So operating leverage, okay, so what is the formula for operating leverage? Percentage change in EBIT upon percentage change in your sales. So operating leverage is equal to increase in EBIT upon EBIT, the whole thing divided by increase in sales upon sales. So that comes to increase in EBIT. So earlier EBIT was 5,000, then it was 7,400. So 7,400 minus 5,000 upon 5,000, the whole thing divided by increase in sales. So that is how much? 28,000 minus 20,000 divided by your original sales, that is 20,000. So it comes to 2,400 upon 5,000 upon 8,000 upon 20,000. So how much is that? 0.48 upon 0.4. So it is 1.2. Okay, 1.2 is a operating leverage. So what does that mean? If your sale increases by 1%, then your EBIT, that is earning before interest and tax, will be increased by 1.2%, and vice versa. So when your sale increases by 40%, your EBIT will increase by 40 into 1.2, that is 0.48 or 48%. 1.2%. Okay, that is what is meant by your operating leverage. Okay, now we'll calculate degree of operating leverage. Okay, so degree of a operating leverage, DOL, it is known as degree of operating leverage. Okay, so degree of operating leverage is at a particular level of sales. Okay, so formula for degree of operating leverage is contribution upon your EBIT. Okay, so at 1000 units, your degree of operating leverage is equal to, how much is the contribution? Contribution is 6,000, right? Divide by your EBIT is 5,000 at 1000 units, right? So 6,000 upon 5,000. 6,000 upon 5,000. So that comes to 1.2. Okay, so at 1,400 units, your degree of operating leverage is equal to your contribution. How much is the contribution? 8,400 divided by your EBIT, 7,400. So 8,400 divided by 7,400. So that comes to 8,400 divided by 7,400. So it comes to 1.13. So at the 1,400 units and the sale of 28,000, your degree of operating leverage is 1.13, whereas at the 1,000 units and at the sale of 20,000 rupees, your degree of operating leverage is 1.2. So this is how you calculate your degree of operating leverage. Okay, so this was about operating leverage. Thank you.